From my perspective, if I were to define it into one sentence, I would say financial sustainability is the ability to perform to a set target for the club on the pitch without requiring for a permanent, consistent and repeated new capital, whether it's debt or equity. I mean, it's a completely different matter when it comes to the independent football regulator. That, to me, is absolute nonsense.
Sasha Ryazantsev is a board director, CFO, and strategy consultant with C-suite and executive board experience in the English Premier League. He is former chief finance and commercial officer of Everton and current CFO advisor to Burnley Football Club. With a background in global investment banking and over $200 billion raised across capital markets, he brings deep expertise in finance, strategy, and growth.
If we can't find an NFL team that is affordable for us because we can't afford to pay $10 billion for it, we can pick up a really decent football club at possibly a fraction of that.
What do you think that means for clubs, and how do you think that has impacted how clubs think about their own spending?
Well, I think it's
Hi, and welcome back to the Berkira podcast. The idea behind these conversations, as I mentioned already, is pretty simple. We want to step back from headlines and talk to practitioners about sport, media, entertainment themes. Today, we have a great guest as our new guest on the Berkira podcast is Sasha Ryazantsev, that has been working with Burnley as a CFO advisor. Before then, he was CFO of Everton, and also, spent many times in finance in the city. It is a pleasure to have a conversation with him, and we very much welcome him to join us on this podcast. Hi, Sasha.
Hi, Martin. Good afternoon.
Good afternoon. Thank you for joining us. So I'm very pleased to have Sasha with us today. Sasha is currently CFO advisor with Burnley, and also, working closely with the RK Capital, as well as former CFO of Everton, amongst many other roles in the world of sports and finance. It's a pleasure to have you here. Thank you for joining us.
Likewise. Thanks for having me.
So, Sasha, I mean, as you know, in the Berkira podcast, we try and, a little bit unpack and stay away from, some of the chit chat, and I rather focus on what are more investor themes. And I thought, given your experience and expertise, both in the boardroom as well as, formerly as a banker, you can provide some of your guidance to people that are interested to hear more about, how are the impacts of some of the regulatory changes that we're seeing in football. And one of the topics I wanted to cover in particular was financial sustainability. A lot of people keep talking about it's important to have clubs financially sustainable. What does it actually mean in practice? So perhaps I will start with that, if you agree.
We can try, yeah, of course.
Yeah, great. What do you think financial sustainability actually means? At club level, is it cash flow? Is it asset value? Is it support from owners? How, do we make sure that the public understands the meaning of financial sustainability?
Well, as I say, there's quite a few facets of financial sustainability you can look at. From my perspective, if I were to define it into one sentence, I would say financial sustainability is the ability to perform to a set target for the club on the pitch without requiring for a permanent, consistent and repeated new capital, right? Whether it's debt or equity, right? So if you've got a club that's performing really well on the pitch but requires 100 million every year from shareholders or from raising new debt, I don't think that's particularly financially sustainable. Equally, if there's a club that's perhaps breaking even today but is underperforming on the pitch on a permanent basis, if you like, then very soon you might find that it's no longer sustainable just because the revenues are drying up, and the most important stakeholders, which are the fans, of course, are unhappy, and therefore it becomes a bit of a vicious circle. So that's the way I would define it, but of course there's many more ways to define this particular topic.
Yeah, absolutely. And often, there is a public narrative, I guess, that financial sustainability just means spending less, right? Or complying with regulations. But in reality, there is a lot more than that, I guess, right? I mean, there are also changes coming in how, spends are allowed, particularly, I guess, now in UEFA, but also in the Premier League, there is this the new, squad cost rules. What do you think that means for clubs, and how do you think that has impacted how clubs think about, their own spending?
Well, I think it's a level of regulation is important, right? So we see in Spain, it's very clear there's a squad cost ratio, and you can't sign new players if you are, exceeding that. And that's set at the start of the season, not at the end of it. So that's, to me, quite a good way of managing that. UEFA's framework is kind of backwards looking, but I suppose it's one of the reasons for that is the fact that, of course, you don't know which clubs will participate in any particular season in European competitions, and once they qualify, there's not a huge amount of time for UEFA to impose anything on them ahead of that season. So I can understand why they're backward looking. I think the SCR ratio is not perfect, but it kind of makes sense, and I can see why the Premier League clubs overwhelmingly voted in favor of SCR for next season as well. So that, for me, it's quite reasonable. I suppose where you talk about the public perception, we see a lot of noise around individual clubs, right? So what I would like to see more is what's the system as a whole, how robust is the system, rather than looking at idiosyncratic risks. So, for instance, if we take a very famous example of Bury going under, 5 or 6 years ago now, of course, it's quite unfortunate. It's a tragedy for the fans of Bury, but I think we're missing the bigger picture when we solely focus on Bury in itself, because what I look at is the robustness of the system, right? So there's still 92 clubs in the top 4 leagues. There's hundreds below that, and Bury's misfortune is someone else's benefit. So, for instance, the same year that Bury went into administration and were dissolved, Stevenage stayed up because of that, and Stevenage got promoted the following year, as far as I remember. So, for those fans, it's actually been a huge positive from that particular situation, right? So, in that sense, nobody, as far as I know, has ever talked about the impact of Bury and Stevenage. But, we're not celebrating that at all in the public domain, and we are celebrating the misfortune of one club rather than saying, well, the league as a whole is still there. And I would go even further than that. The fact that most clubs have been in existence for 120, maybe 150 years now, is another really important element that we need to understand, that if you look at any other business in the UK, in England, from the 19th century, the majority of those businesses no longer exist, whether they're railways, perhaps cruise lines, coal mines, and many, many other businesses that physically no longer exist. There is no business. Whereas football, the original 12 founding partners of the Football League, they're all still there. Many of them have gone through restructurings. Many of them have gone through trouble financially over the past 150 years, but they still have the same set of fans, and they're still playing, maybe not in the division they would like to be, but they're still out there. So I think we have to appreciate that the business of football as a whole, no matter how crazy it is in many ways, but it's still fairly robust compared to the business out there, outside of football.
Do you think this kind of shows why there is a continued more, attraction of this asset class from an institutional investor perspective? Do you think that's one of the key points that really people are starting to, realize a little bit?
Well, I don't know, because I don't think institutional investors would be looking back 120 years, right? So I think that is taking it a bit too far. I think what they are supposed to be looking is forward, right? So they must be seeing something that we haven't seen, in the sense that they would expect to either get capital appreciation, which has been the case over the past 10 or 15 years, or perhaps actually start seeing some cash flow coming in, whether it's dividend flow or at least operating profitability.
Yeah.
They've seen that happen in other sports, like Formula One, for instance, famously has done really, really well over the past decade. But also in team sports, such, they are closer to football, such as the NFL or NBA. And I think part of the reason why there's so much investment coming into football as a whole, but English football in particular, is that a lot of investors are simply priced out from investing into any of those US franchises, right? And therefore they think, well, if we can't find an NFL team that is affordable for us because we can't afford to pay $10 billion for it, we can pick up a really decent football club at possibly a fraction of that, right? Maybe for 200 million or 500 million, depending on the level. And I think that's what's driving that investment profile and they're thinking, well, if those leagues have succeeded and we have a very strong historic league in England and in Europe as a whole, we can make it work here as well.
Yeah. Okay. Now, can I walk back actually a little bit on what you were talking about the squad value ratio, the new rules? Do you mind to unpack them a little bit as much as possible? What's your, let's say, understanding, of how this actually will be calculated?
Yeah, I think we can try, of course. And it's not easy to talk them through without the numbers and cheat sheets, if you like. But in very simple terms, prior to this, we had a profitability rule whereby we looked at your profit before tax over a 3-year period. And then we had certain adjustments to add back your expenditure on the stadium, your women's team, and some others. And we were allowed to make a loss. Now, for UEFA, it was 35 million euros. And for the Premier League, it was 105 million sterling, right, at the time, over 3 years. Now, when these rules came in 2012, I believe, nobody ever thought that anyone would ever come close to breaching the £105 million loss limit. I mean, that seemed absolutely ridiculous, right?
Yeah.
Whereas a decade later, we've seen a number of clubs either actually breach those rules or come really close to breaching them. And that's where we've been before. And then what UEFA came up with about 4 or 5 years ago is to introduce a squad cost ratio, which takes effectively just your football costs, such as your wages, agent fees, amortization, and first team manager, and then divides it over your football related revenue. So that automatically takes out anything that is not kind of football related from your ratio. And then the expectation for UEFA was that a 70% ratio is a sustainable one that they're happy with. They started from 90 and then moved down from 90, 80, and then 70, which is the current ratio that's set for the foreseeable future. For the Premier League, I suspect it was difficult not to engage and align themselves with the same ratio when they look at the sustainability of English clubs. And then from next season, we will be in that exact scenario as clubs to have to comply with that ratio. There are certain differences between the two ratios. They're not over the same time period, and there are some difference in exactly how they calculated, but overall they're much closer to each other than, say, having a PSR system in the English league versus an SCR system in UEFA.
And what do you think that means in terms of how clubs are going to look at investment in infrastructure? Is that going to be easier, less easy? Is it going to be able to basically improve some of the, say, investments outside of the pitch? Because one of the things you always hear is you got to put money on the pitch, you got to put money on the squad, and I guess that's the fact now that you kind of cap how much money you can put on the squad. Doesn't mean that we might be seeing more investments in other areas of a football club.
Well, I very much hope so. I think it's you can see many clubs have invested off the pitch, right? So in new stadia like Everton during my days there. Like Manchester City have been expanding their stadium over the years. Tottenham have built a stadium recently. So that has not really been a problem for those clubs that have cash, available to do that. I don't think that was driven by necessarily by regulation, right? And the same thing we've seen at training ground development and some other development for clubs that have money physically. They can do that regardless of regulation. Now, going forward, of course, what's really interesting is that for the bigger clubs in England, they are falling behind a little bit. If you saw the Deloitte's Business of Football review this year, they have, for the first time, or maybe the second time, I know, but they're not really leading those rankings anymore, right? English clubs. Look, I think it's a really crude way of doing it, looking purely at revenue, but it gives you an idea. And one area where they've really fallen behind tends to be matchday revenue in particular. As well as commercial, but matchday revenue is the one that you can improve really in England only with building a new stadium or expanding an existing one. And that's where the cost of that comes in. It's not a regulatory issue. It's more an issue that, if you want to build a new 90,000-seater stadium that one of the clubs in the country might want to do fairly soon, if I were to put a number on the cost, including land acquisition, the design fees, planning permission, infrastructure works, and the actual stadium, I don't think you'll get any change from around £3 billion to do that nowadays, right? Given what we've seen in the more recent projects. And I think then the question becomes, okay, well, that £3 billion will give you, maybe you can double your matchday revenue, and maybe you will be then similar level as Barcelona or Real Madrid. But does that expenditure really pay off? Does that £3 billion expense return provide a sufficient return on capital, right? And that's, look, I don't know the numbers for that particular project, but genuinely, it's really difficult to make a case for a new stadium in England given the cost.
Yeah. Okay, well, before we swap topic a little bit, I was thinking, should we maybe just focus on how, the UEFA cost control framework, interacts, let's say, with the one that we've just been discussing, for, let's say, the national leagues? Do you think overall, there is good overlap? Do you think there is too much regulation, too many differences of opinion, and how can clubs, operate in this environment, if so?
I think both the Premier League and UEFA over time, they've done, in my opinion, quite well on regulation. So I wouldn't knock it too much. I mean, it's a completely different matter when it comes to the independent football regulator. That's, to me, that is absolute nonsense. But those have been fairly good, right? The challenge is for newly qualified clubs, right? So for those clubs who don't typically compete in Europe, when they do qualify, they almost invariably are likely to find themselves really tight and possibly in breach with regulation. So when those clubs are trying to compete and in the Premier League are allowed to go up to 85% squad cost ratio, and in fact actually exceed it quite dramatically without a particular strong penalty for doing so, if they do, or when they qualify, all of a sudden they have to go down to 70% to be compliant within the UEFA framework. And on top of that, in the year that they have to go down to 70, they don't actually book all of the European revenue, yet they probably need to invest in the squad to be able to compete in Europe. So there are some challenges around that. So that's where the mismatch between the two systems might play out in the future. Okay,
well, look, as I said, we can swap topic a little bit. I was thinking another area that would have been interesting to discuss with you is multi-club ownership. There have been an explosion of various type of multi-club ownership, from full control to, some investors that instead are looking at leveraging various minority stakes in perhaps smaller clubs. So how do you see, these developments? What do you think are the main advantages? What do you think, things needs to, perhaps be better understood? Do you think it actually helps, improve sustainability? I leave it at that for now.
Well, it improves sustainability, quite possibly. It all depends, right? So we've seen some fairly dubious examples of MCOs, when companies went out and bought a dozen of different clubs, majority, minority, and then at the very least, you might say, well, what's the management time involved in managing those, right? Mm-hmm. But the reality is that you're not well positioned if you have so many clubs that you have to manage, and then I don't think you will be generating any additional synergies from having more than one or two additional clubs, right? There are more than 300 clubs, I believe, in MCOs currently in Europe. So clearly it's a topic that a lot of people are looking at. Many of them are sort of 2 or 3 clubs, but there's some that are much bigger. For me, there are 2 key areas. Is like in any consolidation, is are you going to generate revenue synergies or are you going to generate cost synergies? In football, it tends to be synergies around sort of player trading, and the fact that some markets are more open than others to moving players from outside of that jurisdiction into the league and then moving them on to another league. So that could be something. There are areas around academy, for instance, that may be more competitive in one country than another. And then there's regulatory issues as well. So there might be some arbitrage around that. I think what I would say is that it's really important, if you're serious about it. I don't believe in a farm club culture, because that really destroys your fan base within the smaller club. And when you have clubs that are equal, give or take, and are fairly independent between themselves, and they can do most things themselves, and all they're doing is introducing a degree of additional ability to play trade between them. I think that makes sense. I think it's
But that's
really
restricted, no? A little bit. There is some restrictions in how much.
Of course, yeah, of course. But the thing is, there are you can work within those restrictions, and we're not talking about free for all. We're not talking about moving dozens of players in and out and every single time, or creating off-market transactions with valuations that don't make sense. No, that I don't agree with, and I don't think anyone should do it. But simple things where one market may be much cheaper to buy into than another, for instance, right? That's a synergy in itself. So you are buying, as a group, you're buying players at not a discount, but at a market level that exists in a different jurisdiction that you are not able to buy if you're an English club, for instance. That could be a significant synergy towards the group. Is the ability to give playing time to players in different leagues that you may not be able to do if you don't have a club. The ability to bring foreign players to Europe when you can't do the same by bringing them to England. So all of these things. The other thing I would say is really important is if you do have some aspirations in playing for playing in Europe, for instance, which I think most people do, especially those who are in top divisions. I think that's where you are limited in terms of which leagues you can possibly go to. In my opinion, you can only go to a league that has automatic qualification for those competitions, rather than one that has a playoff scenario whereby you qualify for a Champions League qualification, and then if you lose your playoff, you drop down to Europa League and possibly then to Conference. So any of that league for me is an absolute no-go area, because that really restricts your ability to qualify for competitions with 2 clubs, right? That's really important. And then you look at the leagues that are within that bracket. There aren't that many. There's maybe 5 leagues or whatever. So in a simple example, England and Spain works, but England and, say, Portugal probably doesn't. That's my personal opinion, and people might disagree, but that's where
You think because of the gap between the leagues, or
it's actually to do with the fact that the way the qualification works, and
it's actually qualification for European competitions.
Yes, that's right. So because you have a scenario whereby you would need to qualify for in certain place, I think the 3rd or something, get into a qualification round rather than directly. I mean, look, it's perhaps too much detail, but the fact that people do need to look at that, because you don't want to be in a position whereby you qualify once in 10 years, your club in England qualifies for European competition and is unable to participate. That's a
Crystal Palace situation, no?
No, Palace is different because they were able to participate. They just were unable to participate in the competition they qualified for. If the scenario was such that Lyon, for instance, were qualified to be in a playoff position for Champions League, or for instance, that would have prevented Palace from playing in any European competition at all.
Yeah, but do you think it's fair that those decisions need to be made by March 1st when you don't know who's qualifying by when? And
Well, fair or not, I think it's it's a fact of life, right? Because it's you can't have a decision in June, right? Just
it's too late.
And I can understand why it's a problem for clubs, right?
Yeah.
But the framework is there; it's quite clear, and to me, I don't think it's particularly contentious, really.
One of the things I also, like to think about is the benefit of MCOs is that it allows to also have let's say, a deeper management team, right? Because, if you have more than one club, or, particularly if there are clubs that can, both aspire a certain level of revenue, for example, I would assume you would be able to hire, a CRO that could be covering both clubs, perhaps also deeper expertise on the legal function, on the finance functions. So actually, you think, perhaps more specifically in, let's say, the area that we know better, do you think, the MCO also impacts the finance functions and some of the other more commercial areas of a club? And is there a benefit?
I think so. I think, look, I don't think there's a cost benefit because necessarily because you still have to have local finance teams, and there's only so much synergy you can deliver from that. And there's different jurisdictions, different accounting policies, different auditors, etc. What you need to look at is, of course, consolidation and a group level accounting, etc. But it does give you a few different options at the same time, financially, in terms of raising equity or debt at group level, and ability to have certain financial arrangements between that and the clubs. You could argue that by having more than one club, especially clubs that are of similar stature, you could possibly de-risk group level finances as well. Whereas, if you can argue that if you have underperformance within one club, it's unlikely to be matched 1-for-1 with underperformance at the other club. So you have that diversification effect. So yeah, that's the way I would think about it. I mean, in terms of management time, of course, it takes time and people, manpower to do more of that. But I think within the industry, we have the capacity and capability to do so.
Great. Well, Sasha, I think that was my last question. Thank you very much for taking the time. I'm sure, this has been a conversation that will interest and inspire a lot of finance people, or, in general, more, investors and operators that are looking at the world of football. So I thank you very much for your views, and I look forward to, staying in touch and speaking soon.
Thanks very much. It's been a pleasure. Thank you.
Thank you very much for listening to our new podcast. We look forward to continue the conversations, and of course, feel free to continue to follow also our conversation through our Substack on the Berkeda Brief. And please do feel free to reach out with any feedback, comments, or indeed, other people that you would like us to, other people that you would like us to have participate in these conversations. Thank you, and have a good day.